Hello everyone, you are welcome to a new trading day. This has been easy for us. Today we are going to look at just one asset and how we are going to trade it. So straight into the video. This is Vix25 for us, and that is what we are going to be looking at. All right. Vix25 has been very tricky in the sense that it's been sort of ranging between this high and this low. That is on the long-term perspective. All right. We are not bearish, we are not bullish, but we can see that this current price action has been bearish to the downside. So that is what we are going to follow. And we have this low here as a draw on liquidity. Draw on liquidity means that price is more likely to be attracted to this low than the highs. All right. So we label that as our DOL, draw on liquidity. Now, since we are tilting towards the downside, we are going to frame a trade, all right, towards the downside, and this is what we're going to do. We are on the daily time frame right now, and I'm zooming in. All right, so let me make this bold. Great. So you can see that we kept breaking the lows from here. This was a break. This was another break to the downside, and even here we had some sort of a break of this low on the daily time frame, and we kept breaking the lows, all right, to the downside. And even here we had a break. Let me zoom out or in, I don't know. I often get confused with these terms right here, but we had a break here. So 3 days ago we had this bearish candle. Yesterday we had this candle break with the body close below, but it's not too convincing. This is sort of a doji. It's signaling what, a reversal to the upside. Is a signal of a reversal to the upside. So how do we confirm that? We are going to go to the lower time frame to confirm, and then possibly take a trade to the upside. All right. So I want us to take notice of this fair value gap that was created even as market was trading down. And today this candle went into that fair value gap, and we are seeing some sort of a reaction. So for now, we still have this fair value gap that has not been filled yet. Price has never visited the zone, and it is most likely that we are going to see price move towards that direction before we expand much more lower. So going down to our 8 hour time frame, on our 8 hour time frame, there isn't anything much left to be seen, or there isn't anything left to really talk about, except for the fact that this red candle before this candle bullish move is what, a bullish order block. So this is an order block, very valid, and I'll show you why it's valid. First of all, we've had a sweep of the low. All right, let me remove this. We'll come back to that. We have this previous red candle. The low has been swept, as you can see. The low has been swept, and when price went below that low, it failed to close below. It closed back within the range, and we had a bullish candle. The next candle opened and traded up above this high and this high, giving us a break of structure. So this was our, or this is still our fair value gap as we marked on the daily time frame here. As we marked on the daily time frame, and we've had a break of structure here. This candle, we can call it an internal shift of structure here. So as we go down more, you confirm that. So let's go down to our 4 hour. So on our 4 hour, we can still see that once we've had that internal shift here, price left this gap here for us, which it has not filled yet, which I believe is going to come there to really mitigate the zone before it is also overlapping with this fair value gap here. It's an inversion fair value gap, and I'm of the view that it's going to come back there to mitigate the zone before we buy to the upside. So let's keep going down to, let's just say, so we are going to our 2 hour time frame. My network is disturbing a bit, but let's see. So we have our 4 hour fair value gap here. We have our drawn liquidity down here, and we have this fair value gap above us also on the 4 hour, and then we have another fair value gap to the upside here. All right, so if you are going to catch a buy, we are going to hope that price is going to go all the way up here to rebalance some of these imbalances that are left behind here. So going down to our 1 hour, we are looking at how to frame a trade. All right, so on our 1 hour, you can see that this zone here marked is our daily fair value gap. All right, and we have our 4 hour fair value gap also here. So currently price is using this other block, and we don't know, sometimes price never fills the fair value gap here and it becomes a breakaway gap, which means that price is never going to come there to mitigate it. But you can see that as we are trading inside of that bearish fair value gap on the 4 hour, you can see a liquidity sweep or a break of structure above here, and then we had this candle trading us back down, pushing us back down into the range, sweeping this liquidity to mitigate this other block. And right after, we are seeing some sort of a push to the upside. All right, so I'm already in this trade. Let me see if I can show you, but okay, no, it's not possible anyway. I'm in this trade on my phone and I may not be able to show you. So this was where I entered my trade from, and my stop loss is somewhere here, and I'm going for that area as a target. All right, I'm going for that area as a target. But going down to a 15-minute time frame, what I would expect price to do is to break this area with a candle body. Why? Because this last up close candle here is a bearish order block, which I'm expecting price to uh, tap into, give us some sort of reaction and then break finally. But if the sell becomes strong from this zone, then I'm going to expect price to drop into this fair value gap and then continue the buy move. All right, in which case this is going to be some liquidity that has been engineered before the zone, and right inside of this fair value gap, we can't really see any PDRA, that's price demand zone, that price is going to use to buy, except for this red candle that is here. So if price is to retrace down into the fair value gap, I'm going to buy from here. I'm going to buy from here, put my stop loss right here below the zone, and I'm going to push for the upside. All right, so this is how I'm looking forward to trade VIX25 on this particular day, which is 29th October 2024. Is 12 p.m. or it's 12 noon. So let's see what happens. So you'll be watching to see if price is going to sell from here, then you'll be watching this area for a buy. All right, be watching this area for a buy, not inside of the fair value gap, but actually this down close candle. So you can buy from this price point 1981.4. 1981.4. You can buy from that price zone. Let me see. Okay, so you can buy from here 1981.33 or so your entry is here and your stop loss is here. So let me use red for the stop loss and green for the entry. Let me take a screenshot. Good, 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 good. So this is our setup for Vix25. Actually, I'll be looking forward for a sell from here. For a sell from here. Back into the fair value gap before we push to the upside, right? Okay, so thank you so much. I'm going to end the video here and then hope that you will take this trade with me when price hits this demand zone here. So before then, you have this high, you have this high, you have this low that has been broken, all right? And market gave us a higher high. Oh God, God, God. This was a high, this was a low, and we have had a lower low right here. So this sets up the stage for a sell signal. So I'm going to sell from this zone towards the fair value gap right here. I'm going to exit here and re-enter a buy from this demand zone. All right, so I'll be watching how the candlestick approach this zone. If it's strong and aggressive, I'm out. But if it's going to be weak, then I'm going to join that trade. We have a fair value gap here. We have these two up close candles as well, right inside of this bearish order block. So we keep watching, and maybe you want to watch with me and take this trade on your own. All right, pick your phone, go to the 15-minute time frame, locate the last bullish candle around the zone and wait there. Maybe you look for a weak rejection and then you sell towards 1981 as your take profit. All right, your stop loss right above the zone somewhere here. So this is going to be your stop loss, 2010. This is going to be your stop loss. This is going to be your stop loss. This is going to be your stop loss. This price is going to be your stop loss, and this is going to be your take profit. All right, see you. Bye bye.